Welcome to the Smart Investing Podcast, brought to you by Money and Me, an investor education and awareness initiative by PGIM India Mutual Fund.
PSUs or public sector undertakings. You've probably heard these three letters all over town, probably read a headline or two convincing you that, their comeback is good enough reason for them to make a way into your investment portfolio. But is that all there is to the story? That's what we're exploring on this episode of Smart Investing, brought to you by PGIM India Mutual Fund. Hi everyone, I'm Ahalya, keeping you company as per usual, only for a short little while before handing over the mics to Ravi and Lisa, who are, of course, our resident speakers on the podcast, who are going to be uncovering the real sum and substance. There are a lot of aspects to take into consideration when pondering over your investment in this particular regard. So, without further ado, over to you, Ravi, Lisa, and everyone. Buckle up.
Thanks, Ahalya. Welcome to another episode of Smart Investing. Now, if you remember, in the last two episodes, we discussed how to go about selecting equity funds, and we also covered how active and passive funds can really complement your portfolio. Now, in this episode, we intend to demystify one more popular category of funds, which are called sector and thematic funds, which are really gaining popularity lately. If you've been observing the market, you would have witnessed how PSU shares have been in the limelight in the last 1 year. Now, as investors, one may be tempted to invest in PSU stocks. So this is where sector funds come into play. They invest in one particular sector or theme such as PSU, technology, pharma, and so on. What we have been observing lately is that many fund houses are coming up with thematic and sector funds. I was just looking at the numbers. The AUM in this category has almost increased by 80% in the last 1 year. In fact, in May alone, sector fund category has got net inflows of a staggering 19,200 crore. Now, to dissect this trend further, we have with us Lisa, who will help us understand what role do sector and thematic funds play in our portfolio. So, welcome, Lisa.
Hi Ravi, thanks for having me, and I guess once again you have picked such an interesting topic to discuss for us.
So Lisa, I'll dive straight in. Do you invest in sector funds, and what are your thoughts about it?
So Ravi, sector funds, as you rightly said, have picked up quite a lot of steam in the last year or so. And traditionally, those sector and thematic funds are not like the most popular among individual investors, right? But lately, there has been an increasing traction in this category due to new fund launches which have also happened over the last 1 year or so. Personally, I don't invest in these categories. Honestly, it is important to understand that these funds do well, or rather have done well recently also, but are not meant for all types of investors. They serve a purpose in one's portfolio of being, kind of a return kicker. But to get that kick, you need to be slightly more experienced, and you need to have time on your hands as well to look into some of the nuances of such funds. My issue really is with the latter, which is time. I don't spend too much time looking at some of the peripheral details of my mutual fund investments, and hence I prefer keeping it to something more diversified. Sector and thematic funds need a buy-in also from the investor in terms of the story that the sector is telling, to make it a popular investment at a point in time. Not all sectors do well at all times.
Right, Lisa, you made a very important point on not all sectors doing well at all times. So let me give the audience some numbers so that they can relate to. In 2020, during the COVID period, pharma was the best performing sector, and the category average return of pharma funds was around 66% absolute return. And in 2021, the technology and IT sector was a top performing sector. So tech and IT funds delivered almost 64% returns. So that's on the category average. Now in 2022 and 2023, what we are seeing is that PSU funds are topping the charts. So clearly sectors rotate. So moving on, a sector fund invests in a stocks from a particular sector, but what about thematic funds? So how do they operate?
Yeah, Ravi, you're absolutely right. So, you mentioned IT sector also. In the last, if you look at the data, it'll show that it's not done as well as as you were saying, your infrastructure funds or PSU funds. It's at the bottom, whereas these funds are at the top. So, sector funds do tend to rotate. and thematics also to an extent. Now, sector funds invest in stocks, like you said, from a defined sector. So a banking sector fund will invest in a portfolio of banks, a pharma sector fund will invest in stocks from healthcare sector and so on. Thematic funds are slightly broader than sector funds. For example, if the theme is consumption, the fund may have stocks from FMCG or banks or even travel. All these do represent the consumption trend in the economy and hence the theme, and stocks of companies are woven around that theme of spending for consumption. So another example could be a theme like energy, which will have stocks from sectors like oil and gas, power, even financials, which are involved in funding energy companies and so on. So I think it's less important really to define what's in the fund, whether it is a sector fund or thematic. What's more important is to understand that choices for stocks in such funds, especially sector funds, are relatively more limited, right? This means that the portfolio is likely to be more concentrated, and that too in just one sector, and hence it's a comparatively riskier proposition as compared to thematic funds.
Right. So what I understand is thematic funds have a relatively broader mandate and they can invest in ancillary sectors also, whereas sector funds can only invest in one particular sector. So I would assume that, sector funds will be more riskier than thematic funds. So how do you see the risk aspect of it?
Yeah, so, risk is an important discussion. And when you look at just equity as an asset class, the risk in the short term is volatility because listed prices of stocks change on a daily basis. Over time, though, if you are invested in a good quality portfolio, price changes tend to align with the overall earnings growth trend, and that's how returns can compound over longer periods of time. This is for equity in general. Now, when you invest in a sector fund, this applies as well. These two types, like the volatility in short term and earnings quality in the long run, are risks that remain, and there is need to understand that it will be there whether you invest in a sector fund or a thematic fund. But there is an added risk of some change happening. It could be regulatory or macro or demand or raw material based, but some shift in external or internal factors which impacts companies only in that one sector. If the impact is negative, then there will be a similar kind of negative change in stock prices of stocks in that sector. And because your sector fund invests only, in one particular type of sector or stocks, the risk of fall in prices then for that portfolio gets exaggerated. For example, let's say you have a banking sector fund, right, which invests in banks. And in one of the monetary policy announcements, the RBI increases the cash reserve ratio by more than what the market expected or, even unexpectedly. So on this news, the banking stocks across board are likely to correct because of negative sentiment. And hence a banking sector fund on that day will fare worse than a diversified fund. To this extent, thematic funds may be considered less risky than a sector fund, given that they are more diversified. So to your question of, risk in such funds, sector funds are a higher risk than all kinds of diversified equity funds, and thematic funds are higher risk than, regular market cap based diversified funds like large cap or large and mid cap, etc. This is not a technical assessment of risk in a sector or a thematic funds. Rather, it is more about how you can execute your own investment strategy. The technical risk will depend on the actual composition of the scheme itself.
Right. So now when I look at these funds, so of course there are 11 category of equity funds and there are other 6-7 categories of hybrid funds. So we have so many plethora of funds. So where do thematic and sector funds really fit into our portfolio of overall, equity allocation? So how would you recommend investors to invest in these funds?
So Ravi, at the beginning when we were talking, I did mention that these are not funds which are meant for everyone, and you do require a level of, experience. And that is true because of the enhanced risk that these funds carry. And it's true also because sometimes the opportunity to make money by investing in a particular sector may be more tactical than a strategic kind of allocation. What I mean by that is in a regular economic cycle of say 7 to 8 years, there are some periods when because of macro events or the way the demand cycle moves, certain sectors may do better for a given period of time. As we were talking earlier, that infrastructure has been doing well now, and that reflects in those infrastructure kind of funds. If you are, say, working in a particular sector, say like the healthcare sector, and you realize that a regulatory change will be beneficial for the segment, you may want to take exposure to this event through a sector fund. In the immediate time, this new position in your equity investing will perhaps yield above average returns because of the change, because the regulatory change is positive. Over time, though, earnings of the companies will normalize to the change and there is no longer an extraordinary profit to be made. That's the time you may think of exiting the sector fund, as the bulk of the return, thanks to this external regulatory change, has played through. See, you were able to identify this opportunistic or tactical investment because you work in the sector, and others may not be able to spot it, or they may spot it too late. Then what happens is that the entry and exit point of this opportunistic investment in a sector does not match the change itself, and the returns you earn could be disappointing. Take another example of, say, the gold mining companies. This is more an international investment opportunity, but very sector specific. Now, these stocks did well in 2019 and 20, but they've been struggling despite a shoot up in gold prices. So these kind of things do happen in sector funds, and identifying the right moment of entry and exit does become a bit nuanced. So to invest in sector funds, not only do you need to know these details of sectors, but also you have to be able to spot the opportunistic buying and selling to make the most of it. So there is an element of timing. Themes, on the other hand, are likely to have a slightly longer term impact. So they're not as short-term opportunistic investments as sector funds can be sometimes. For example, the consumption theme. This is touted as a multi-year positive for an economy like India, and that opportunity can go on expanding. Once you understand this, you can decide to include sector funds from time to time in your equity allocation, or thematic funds for slightly longer periods. For both thematic and sector funds, restricting allocation to say, 1/5 of your overall equity allocation is a good kind of rule of thumb. Don't get too aggressive and, don't get too conservative to this kind of investing. I would still leave it as a choice only for experienced investors rather than first-time investors, and also investors who can take out time to track what's happening in a given sector or even in a theme.
Yeah, so what I understand is that you cannot completely ignore sector and thematic funds. If you want to invest, you have to know the entry and exit very well. And what we have been seeing lately is, performance chasing, people investing in funds or categories that have been, doing well. So that happens, I think, across all markets. And I think we have covered a lot of ground here. Thanks, Lisa, for sharing your insights, and which brings us to the end of this episode. Before we wrap up, I would like to quickly summarize what we have learned. Now, sector funds invest in one particular sector, while thematic funds are more diversified. They can invest in ancillary sectors which can directly benefit from one sector. So within equity funds category, sector funds tend to carry higher risk as they have a narrow investment mandate. Now, as we discussed, no single sector is the top performing sector every year. So don't expect that your fund will perform well every year. You have to get the entry and exit right in sector funds, and don't invest or over allocate in this category. Some portion of your portfolio can be allocated or invested for such tactical calls. Now finally, don't invest after seeing a sector fund already topping the chart. Now the performance may not sustain and repeat the next year, and as always, it's best to contact your financial advisor or mutual fund distributor to understand how these funds really fit into your portfolio. That's all we had for today, and thank you so much, Lisa, for helping our audience understand the nuances of this category. Thank you so much.
Thanks, Ravi. And you made a very good point that investing in sector funds looking at the rear view mirror can become tricky. So one shouldn't look at recent performance only when deciding to invest in these types of funds. Thanks for having me.
My pleasure.
As we dive deeper and deeper into this series, the pages of my notebook get more and more filled up because I think we're really starting to explore the various trends and nuances of investment in a way that is quite agreeable to anyone in their investor journey, whether you're right at the beginning, in the middle. I mean, if you're at the end, congratulations. But yeah, thank you, Ravi, Lisa, for another fantastic episode of Smart Investing. We're going to be back, I'm sure, with just as exciting a topic in the future. But in the meantime, folks, as always, make sure to consult your financial advisors for customized, tailor-made financial advice that is trusted by you and leads you in the direction that you want to go. I hope you found value in this episode. We'll catch you very soon. But in the meantime, stay safe, stay happy, and of course, happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
You are listening to the Smart Investing Podcast, brought to you by Money and Me, an investor education and awareness initiative by PGIM India Mutual Fund.